Welcome back to the Talking Hedge. I'm Josh Kincaid, Capital Markets Analyst and host of your Cannabis Business Podcast. Today we're going to take a look at insurance for the cannabis and hemp sector, looking at ways that COVID might change the way cannabis is insured, as well as 5 things to know about hemp crop loss insurance and some other dangers. There's an individual from New Zealand who ended up dying from potting mixture. And we'll take a look at how cannabis growers can brace themselves for a product recall. We're all too familiar with what happens with childcare products or automobiles with product recalls, but what happens with cannabis? So there's a situation where there was some potting mixture in New Zealand where an individual contracted Legionnaire's disease. That's an issue from bacteria growing in the potting mixture and not wearing a mask, for example. And so it's speculated that this 77-year-old man ended up dying after mixing some potting soil. Apparently, he'd split open the bags and hose it down. He'd wear gloves, but not a mask. So use a mask. So tainted products are turning up more and more in the cannabis industry. Such villains as mold and yeast are threatening marijuana plants. So it's wise for cultivators to be ready for a recall. One way to get ahead of the curve is to have a plan in place to effectively and safely get tainted products off of the market. So cultivators have to be positioned to pinpoint and set apart the affected plants and be aware of whom to contact when complaints come. So unlike traditional growers and producers, there's no federal regulatory framework where direct guidance can be harvested. So if you don't already have a plan, that's step one. Create a plan. You need to look to how to determine when to pull the product from the market, identifying a recall situation, readying your company to work with local regulators, and dealing with the contaminated product. I would also add on there that PR, the next step is to retain customers. That's where that PR comes in at. Crop loss insurance is interesting, especially in a year like this, where a lot of producers might not be able to get the same yield or the same sales that they had before. I know last year there was a lawsuit out of Oregon. There was somebody who sold seeds from Oregon to a Colorado producer, hemp seeds or beans, as they call them. And those beans didn't sprout. So whether they weren't the right climate, weren't the right bean for the longitude or latitude where they're at, regardless, there was some lawsuits. So curious to see if those will pan out with crop loss insurance. So it's been about 15 months since the passage of the 2018 Farm Bill. The U.S. Department of Agriculture is now rolling out 2 pilot crop insurance programs for the hemp industry. So here's 5 details for cultivators to know. Number 1 is that CBD qualifies for crop insurance. When hemp was made federally legal under the 2018 Farm Bill, farmers were curious whether crops grown for CBD could be insured. Initially, the USDA only allowed crops grown for fiber, flower, and seed to be covered, but included crops for CBD in its announcement of the insurance programs. Number 2 is that hemp farmers can apply for both types of insurance. That includes protection against various natural causes, including drought, excessive moisture, freeze, and disease, as well as against insurable losses, meaning that if a season's production falls below 50% of a farm's average yield, losses are paid at a rate of 55% of the highest price elected. Number 3 is how do you qualify? Cultivators wanting crop insurance must be licensed and in compliance with state, tribal, or federal regulations, or else operated under a research pilot program as authorized by the 2014 Farm Bill. Cultivators must also report hemp acreage to the USDA, as well as need to have at least 1 year of production history and contract for sale for the insured hemp and meet acreage requirements of 5 acres for CBD and 20 acres for grain and fiber. And then number 4, the coverage is not available nationwide. So as of right now, contact your insurance agent. So here's 4 ways that this pandemic could change cannabis insurance. Number 1 is that cannabis is an essential service. So regardless of the distribution model, the message has been heard and cannabis has been included in essential services at some level across multiple states. The second impact is you're going to see delays with legalization efforts. So it's largely derailed the legalization effort across numerous states and federally. That includes Washington State. We're trying to overturn a felony on maintaining and operating a marijuana lounge. That is a Class C felony in Washington State. So we're trying to get some marijuana lounges. That's going to take a backseat to all of this. So expect some delays with legalization efforts. That includes delays with cannabis insurance products. So there's disruptions that are finding their way into the insurance market. They're waiting and watching before rolling out new insurance products, and particularly with respects to specialty lines. that cannabis reinsurance market, which is already tightening before the pandemic, continues to contract. So reinsurance is going to be impacted. You're seeing attempts on the litigation and governmental response trying to force insurers to pay income loss claims as a result of this pandemic. So if the vast majority of these claims are paid, you'd be looking at a multi-billion-dollar loss. And if those start to be paid, the reinsurance market is going to be hit extremely hard. Also look for more exclusions to product liability for all operators. So given the outbreak of the virus, they wouldn't be surprised if product liability carriers attempt to limit their exposure further. So we've already seen previous existing health conditions being a hurdle for most major exclusions on current policies. So they're expecting that with this pandemic and implications on how underlying health issues are contributed to the death rate, the underwriters will most likely look at increasing that exclusion to reduce their responsibility to pay claims from contributing health issues like asthma and breathing issues. That includes a tough time for vape companies. Vaping will continue to be tough in general. Insurance companies are already hesitant insuring vaping products, especially with the vaping crisis that emerged and now this pandemic. So with the ongoing issues with the respiratory illness, insurance companies may be cautious to provide insurance on products that exacerbate that respiratory illness. So in addition, insurance companies may point to the increase in litigation due to lung-related injuries during the vaping crisis as a reason to limit insuring vaping products during this crisis. And another way the pandemic is impacting the insurance industry is there's a big squeeze. There's disruptions from COVID that'll be felt first and most urgently by smaller licensed operators in an unlimited license states like California and Oregon, as opposed to larger, better capitalized operators in limited license states like Florida, New York, maybe even Nevada. So to properly plan for the fallout, cannabis insurers should be aware of the significant differences in competitive market forces between limited and unlimited licensed states. And the final impact could be that capacity could open up. So the cannabis space has been deemed essential. So we're seeing larger revenues and payroll projections that could incentivize more carriers to enter the space. Due to the recent publication showcasing that cannabis as essential, the increased sales boom and new capacity might entertain this as being the right time to jump in for other carriers. With several states reporting an increase in sales and demand from cannabis products since this outbreak began, annual and monthly insurance premiums run higher for cannabis businesses than other businesses. Because of this, now it could be a good time for insurance companies to reach out and work with cannabis businesses while sales are up and businesses are running at higher profit margins. So how do you think the cannabis industry is going to be impacted? Are you going to see more capacity? You're going to see limited vaping insurance products? Let me know in the show notes what you think or what you expect to see. With that, we're going to roll this one up. I'm Josh Kincaid. This is the Talking Hedge. Don't forget to like, share, and subscribe, or don't. And I'm out.